Oh, we're just getting the numbers here, John, and for once they come in pretty much as forecast, 385,000. That's down from 400,000 the prior week. Actually, we'll look there. It was revised up to 424,000. So initial jobless claims, a significant drop from where they were. The forecast was for 383,000. So we're just about bang on there. Now, the interesting news here in the 383,000. 5,000 may be good news, but tomorrow's jobs day, so people will forget about that. Other than the trend is good, is we're watching the total number of people who got the benefits, any kind of benefits, 13,156,000, and so at that point, let me just double check these numbers here. Actually, we're a little off here, but. Because the numbers that they send out were slow. We have 12,975,000. I apologize for that, but that is for the week of the job survey in July. So we saw a big drop in the total number of people collecting benefits. Doesn't necessarily mean they all got jobs, but it does mean they're moving. The labor force flow is moving in that direction to at least in the labor force from no longer collecting benefits.
So, Mike, let me rattle through the price action. I'll come back to you on some of this data in just a moment. Not much price action to speak of. Your equity market was slightly elevated. It stays that way, up 0.25% on the S&P 500, advancing 10 points. The curve was a little flatter, driven by what's happening at the front end. Yield still higher by a basis point on a 2-year, basically unchanged on a 10-year at about 118, 119, sub 120. Outside of that, in foreign exchange, it's been stable and unchanged through most of this morning on euro dollar, in and around 118 or so. Mike, when you put it all together, if you take the jobless claims we've just seen, the ISM services read we got yesterday, which was really quite tremendous, walk me through the expectations now. Tee us up for Friday and throw in that soft ADP read in the mix if that counts for anything at all.
Well, that's the question. Does it count for anything at all? ADP has gotten the direction right, but not the magnitude for months and months now. Can't really blame them. Economists have had a tough time too, but we're forecasting 870,000 jobs created with a very wide dispersion from 350,000 at the low end to 1.2 million at the high end. So economists really struggling with this. We're looking for 28,000 jobs created in manufacturing. That comes after the better news from the ISM Manufacturing Index. The question will be how many service jobs do we get? That's the big one, and we did see a significant rise in the services numbers. And then labor force participation, 61.8%, expected to tick up from 61.6%. That would be good news, although there's still a lot of pessimism about how many people can be brought back in because of all the retirees.
Mike, we're enjoying a conversation with Ben Emmons, on to you, and then on to the great Steve Raschuta. Let me ask you one question, because you're in the room with Chairman Powell when the heat's on and he's getting grilled with your questions. Do you partition Fed analysis from QE and separate rate dynamics, or do you mush them all together?
I think you partition them at this point because the Fed can start cutting back on QE and it won't be tightening. It'll be just less stimulus. Whereas when they start raising rates, they start to tighten financial conditions, and that will have a bigger effect on the economy. And I know you're going to talk to Steve about that. But at this point, look at them separately. Quickly mention that the trade deficit came in wider than expected. Negative $75.7 billion. The forecast was for 74.2.
Remember when 50 was normal?
That is a huge number. I can quickly check here whether it's a record or not, but it does suggest that it does look like it is the most since the it may be a record. Maybe a record at this point.
I mean, this goes back to Lincoln or even back to Andrew Jackson, right?
Well, although the economy keeps getting big. It was a little bigger than it was in Andrew Jackson's time.